Hey guys, what is up? Faz here. In this video, I will be teaching you another trading strategy that you can use. So at the moment, you guys know the ABC trading strategy, right? But this one is a little bit different to ABC. So instead of having ABC, we also have a D leg. And what the D leg does is it takes out the low of the B leg. So you have A, B, C, D. So I call this strategy ABCD trading strategy. And this is way too powerful, guys. Like it is, I would say it's even powerful than the ABC trading strategy that I have taught at the moment. And this is a trend following strategy. So you cannot trade it without knowing the trend. Okay. So if the market is bearish and you're looking for longs, it is not going to work that well. But I'm going to teach you how to look for a trend and how to use this strategy. So it's very simple. You look for A, B, C. And when you have a ABC pattern, you wait for price to take out the low of the B leg, right? And when the low is taken out, you drop down to smaller time frame and then you look for entry. So the preferred time frames for these strategies are 4-hour time frame is going to be your high time frame. Look for market structure shift on 15 minutes. I am only going to use this time frame, and I only use this time frame for this strategy. Okay. Actually, I use this time frame for most of my trading strategies. So I highly recommend that just forget about 5 minutes or even 15 minutes. You can look for entries on 15 minutes and market structure shift on 15 minutes. But keep your focus on higher time frames like 4-hour, daily, weekly, okay, if you want to become a profitable trader. Because I know when you are trading on 5 minute and 1 minute, you see your trade going in profit and you get that dopamine hit where you're like, wow, I'm making profits. And then what happens? Within a minute, that trade reverses on you and you lose. So you start revenge trading and you lose your account. So stick to these time frames, please. I beg you. So you have A, B, C, and then you have a D leg, okay? And when you have D leg, you look for market structure shift. Now, in the ABC, we would look for market structure shift below the range. So this is the range. We will look for market structure shift here somewhere. But for A, B, C, D, you can look for market structure shift anywhere, as long as this level is not broken. Okay, so you look for market structure shift, you take your entry on the 15 minute and boom, simple as that, guys. Okay, A, B, C, D, look for market structure shift with displacement on 15 minutes. The displacement is when you have fair value gap, okay, before market structure shift. Before market structure, remember that, guys. If there is no fair value gap, when the market structure shift happens, then you will not take the entry. But if there's fair value gap in the below the 0.5 level, right? So this would be the 0.5 level, and you should look for fair value gap here. And the first candle of the fair value gap could be your auto block, or the last bearish candle before the move that broke the structure could be your auto block as well. So you look for entry and boom. It is very simple, and I will be giving you some examples. So let's do the same thing for a short example. So let's assume that you are in a bearish trend, okay? So you are bearish. So you look for something like this. And when you have A, B, C, you wait for price to take out this liquidity level or the high of the B leg. So you have A, B. This B leg is the high, and we have C. So C is the break of structure. This level takes out liquidity. You look for market structure shift on 15 minutes, and boom, you take your trade. It's really that simple, guys. And now I'm going to give you a couple of examples, and it's going to be clear to you. All right, guys. So here is example number 1. At the moment, you can see in this example that we are bullish. So you don't want to go way back, okay? Just look at the recent price action. Like I would say the price action of the last 30 days. And if you're going up in the last 20 or 30 days, then you could be bullish. Or if in the last 20 or 30 days we are going down, then you can take short positions, okay? So I'm just looking at here. I'm not looking far back, just somewhere around like 20 or 30 days back, and look at here. So now what we have is we have A, B, C, right? And after that, we have the low of the B leg right here. So now we are in the D leg. And if I play this through, you can see price took out the low of the B leg. So now we have A, B, C, D. Okay, let's drop down to 15-minute time frame and look for market structure shift. We have a perfect market structure shift here, leaving this candle behind. As you can see, there's fair value gap here as well. So I like to take my entries from the extreme fair value gap or auto blocks, and the first candle of the fair value gap could be an auto block. And now what I'm going to do is wait for price to come back into my zone during kill zone hours. Okay, so I go for 1 to 2. That is it. It's best for my psychology. And so let's see what happens. So we get our entry at 8 o'clock, which is during London session. Okay, and you're gonna see that price goes ahead and hits your take profit. Okay, very simple, guys. So this setup is gonna work 60 to 70% of the time. Okay, and trust me, it works like a charm, guys. So let me repeat this again. Let's go to the 4-hour time frame. Look at this, okay? We have A, B, and C. So now what happens when price takes out the liquidity from the both sides of the range, price then tends to go in its original direction. So if we are bullish, right, price is going to go higher after taking out both sides of the liquidity. So we have a purge here and we have a purge here. So now price has no destination but to go upside. It's really that simple, guys. So let me give you guys another example. All right, guys, so here is example number 2. I'm looking at USD CAD, and if I go back for the past 30 days, you can see that we are bullish, right? So if you go back, you can see that we have been bullish overall. So, but it doesn't matter, okay? You just want to look at the last 30 days or 20 days. I would say 30 days is the perfect. So right here, what we have is A, B, C right here, right? So we have the ABC pattern completion, right? And after that, we have the low of the B leg. So we wait for price to take out the low. It happens right here. So we drop down to 15-minute time frame and look for market structure shift. And there we have our beautiful market structure shift. So what we do now is we take our entry from the auto block or fair value gap or this candle right here, which could be an auto block as well. So I would have my entry right here, stop just below this level, look for 1 to 2. I'm not sure about you guys, but I always look for 1 to 2. So we have a perfect tap. As you can see, we mitigated this auto block. And oops, my bad. So there you go. TP hit. So, but let's see where this price goes. If you target this level, let's see. Okay, it reverses, I guess. I'm not sure. Never mind. So it hit your take profit. You could have gotten stopped at break even, but the thing is, there was fair value gap here. So you want to look to target this area. So the prime target would be here. But as I said before, I only look for 1 to 2 because it's very good for my psychology. So yeah guys, this was the ABCD trading strategy. I will teach this strategy in more detail in the course update that is coming out this Sunday. I will also be teaching you how you can scalp using smaller time frames using this strategy.